Okay, let's unpack this. Welcome to the deep dive. This is where we sift through a whole stack of info and pull out those, critical nuggets of knowledge for you. Today we're diving into an investment analysis of ITC Limited. We're looking at a whole decade, basically 2015 right through to 2025. We've got detailed reports here, financials, different business segments, the history, even some major controversies. So our mission today, to cut through all that data and really figure out why this huge Indian conglomerate is, well, a lot more complex and frankly more interesting than maybe people think. You might actually be surprised by what's really under the hood. So when most people hear ITC, often the first thing that springs to mind is tobacco. But here's where it gets really interesting. This company has moved way beyond that. It's a truly massive, diversified giant.
Yeah, what's fascinating is exactly that journey. I mean, it started way back 1910 as the Imperial Tobacco Company.
Yeah.
But then, quite strategically, it shed that colonial image, became ITC Ltd. In 1974. And today, it's a powerhouse, multiple sectors. You've got fast-moving consumer goods. Think Ashirvad. Now, Ashirvad isn't just selling flour. It holds a commanding 56% market share in branded packaged wheat flour.
Yeah.
That's
incredible. 56%. Wow.
Yeah, it creates this huge defensive moat, guarantees robust cash flows, almost recession-proof, and then there's Sunfeast and premium biscuits. Plus, they're the absolute leader in India's paperboard and packaging, undisputed.
And it's not just about consumer stuff either, is it? They seem deeply connected to India's agriculture.
Oh, absolutely. Their agribusiness is significant. It's empowered over 4 million Indian farmers. Think about initiatives like eTupal.
Right, I've heard of that.
These are pioneering internet kiosks, basically, giving farmers crucial real-time market info, weather updates, even direct buying options, cutting out middlemen. And beyond that, their IT arm, ITC Infotech. It's not just local. It's got a global footprint, 5 continents. It's really quite a sprawling ecosystem.
Okay, so what really holds all this together? What gives them the confidence for these big strategic moves? I imagine the financials have to be solid.
Incredibly solid. If we connect this back, ITC maintains an almost debt-free balance sheet. We're talking a debt-to-equity ratio consistently near zero, 0.00% for the last decade.
Zero, right.
Pretty much. It's not just being financially careful. It means they operate almost entirely on their own capital. That gives them amazing strategic agility. So unlike companies loaded with debt, they have this freedom, to acquire, spin off, invest heavily in new areas without worrying about debt payments. It makes them incredibly resilient.
And we've seen that agility quite recently, haven't we, with the hotels business demerger?
Precisely. That financial strength fueled that move. Demerging the hotels business into ITC Hotels Limited, that's effective Jan 1, 2025. The aim there is pretty clear. Unlock value. Let the hospitality side pursue an asset-light model.
So focus more on management and brand, less on owning buildings.
Exactly. Less capital tied up in real estate. And look at their profitability metrics. Return on equity, 49.62%. Return on capital employed at 36.46% in March 2025. That shows exceptionally efficient use of capital.
Of course, even giants face headwinds. No company, especially one with this kind of history, gets a completely smooth ride. What are some of the maybe persistent challenges ITC has to navigate, and how have they handled bumps in the road before?
Yeah, that's an important point. I mean, while the tobacco segment is still very profitable, it's got those persistent regulatory risks, plus increasing health awareness. That's a constant pressure. And their other FMCG segments, they face really intense competition from big global players. Constant innovation is key there. But interestingly, ITC has this history of overcoming pretty significant challenges.
Like what?
Well, think back to the mid-1990s. There was a major FARA violation controversy. Big deal at the time. Allegations about foreign exchange rules, things like over-invoicing, unauthorized fund transfers. It was a serious crisis.
So how did they react?
It forced some deep corporate governance reforms. They restructured the board, appointed an independent chief vigilance officer, that sort of thing. It's actually a powerful testament to their resilience, their ability to adapt and, frankly, self-correct under pressure.
Okay, so bringing it all together, what does this mean for you, the listener? If you're looking at ITC stock, it's had some negative returns recently, but the long-term picture shows strong gains. How do we square that?
Well, applying Benjamin Graham's principles gives a, let's say, nuanced view. If you look strictly at the Graham number, that's a pretty conservative valuation metric, it might suggest it's overvalued. The current price is around 409.40. The calculated Graham number is more like 187.02.
So quite a difference.
A big difference. But Graham had other criteria too, right? His asset-based checklist. And looking at those, there are indicators of potential undervaluation. You have to consider the whole picture. that virtually debt-free status, the consistent cash flows, market leadership across all those diverse segments, and their strong ESG credentials too. They've been carbon and water positive for many years now. So putting it all together, it looked like it's trading somewhere in the fair value, maybe slightly undervalued range, especially for a stable dividend-paying conglomerate like this. It's really about looking beyond just one simple metric.
Right. So the takeaway seems to be ITC is this fascinating, financially robust, highly diversified company. It's got a compelling history of overcoming challenges and a pretty clear strategic path forward. So for you, the listener, maybe here's something to think about. Given its deep roots in a legacy business tobacco and this really ambitious pivot into all these diverse consumer areas, how will ITC balance those historical strengths with the kind of agility it needs to really dominate India's future economy? What part of its diversified strategy do you think will be the real engine for its next decade of growth? Something to mull over.